Hi, folks, and welcome to another episode of Money in Politics. And tonight we're going to be looking at something a little different from Humble. We're looking at oil and gas ETFs. And we're going to be deciding if this is a way for you to, so to speak, gas up your portfolio. But first, keep in mind, I am not a financial advisor or registered broker. I am an investor, and I am sharing my personal ideas and some of my experience over the years. For those of you who don't know, ETFs are equivalent to mutual funds in many ways, in that they combine different entities in their basket of assets. One of the things that has really taken a hard hit over the last year, as you can well imagine, has been the oil and gas industry. We're not driving to work anymore. We're not flying as much. We're not having cruise ships out there. So all around the world, the use of oil has gone down for obvious reasons. And that might be, as we look at 2021, as the year of recovery from COVID, if in fact we, with the vaccines, are able to put this behind us, reopen the world, and begin to travel. Maybe not 100% of where we were before COVID, but depending upon, or compared to where we were in 2020, we should be able to reopen the world economy at to a much larger extent than we have in the past. So let me show you what has happened here on two ETFs we're going to be comparing. Again, DIG and GUSH. Those are symbols. So let's take a look. The price of the DIG oil and gas ETF was $211 and change. And today it is down to $87, down from where it was. We go to our comparison when you want to compare two things. Let's put GUSH in there. Boom, we can see buried along the bottom there. Almost lost in the volume numbers, way down here. But if you go back a year ago again, GUSH, if I come over here to today, it's at today's closing price on GUSH is $52.87. And DIG is at $87. Both of these are way down from where they were. Now, let's take a look at what has happened recently. And if we say, let's take a look in the last 3 months, because what happened in the last 3 months, we got the vaccines come out. And here's what we're looking at. So the black line again is DIG. And you can see that over the last 3 months, that is up. It looks like 88%. And GUSH has come back 127% since over the last 3 months. If we look at just a 1 month chart, you can see again, they've gone up, they've come down. Part of the reasons they're down is the pronouncements, I think, of some of the Biden administration people, especially John Kerry, who is the climate change czar. We talk about money in politics. Well, this is where politics comes to play. So we have DIG is up 20%, the black line, over the last month, while at the same period of time we have GUSH up 25%. Folks, I think what is my argument would be that these are turnaround plays. And if we go, and as we said, where were they a year ago? You had GUSH at $717 there on February the 4th of 2020. And DIG was at 196 on that. Whereas DIG today is $87 and GUSH is at $52. If these go back even marginally from where they were 1 year ago, now I'm not saying they're going to get back to where they were, but if DIG goes back from being at $206 to about half of that, that would bring it up to over $100. I think that, and by the way, on December the 30th of 2019, so just a little bit over a year ago, DIG was at $258 a share. Half of that would be about $130. I think right here that we're going to see that DIG can get up to, in the ballpark over the course of this year, to maybe $120 a share. Now, currently it is at $87. DIG is at $87. So if it goes up to $120, that's roughly a 35-point move or so on an $87 stock. I think you could get very likely a 50% move from where DIG is currently. And GUSH might even be a bigger move. It looks like it's gotten down the yellow line on the mat and not gotten up. But again, if we look at the 3-year chart or 3-month chart, you can see that GUSH is coming back. Also, Saudi Arabia cut back on their production of oil by about 1 million, as I recall, 1 million barrels a day. So that's another significant factor in the supply and demand. Now, one of the concerns would be, is the Biden administration going to put the kibosh? They're going to be pushing wind and solar, alternative energy. They're going to be anti-fossil fuel. They're going to be rejoining the Paris Climate Accord. Whatever you think of that, the thing I would say is, while the Biden administration in all likelihood is going to be very anti-fossil fuels, we can't get away from using oil. And Joe Biden is not the president of the world. He's the president of the United States. Canada can go ahead and use oil. South America, Europe, Asia, Australia, etc. Not just for travel, not just for the airlines, not just for our cars, not just for ships at sea and all the shipping that we get going back in trade between nations. You have to use oil for that. You're not going to have a freighter going across the Pacific Ocean on a solar panel or a wind turbine. Not going to happen, folks. And I should say, we're going to have oil for things like plastics. I mean, I have a plastic table here. I have a plastic keyboard. I have the plastic around the monitor on this computer. You cannot get away from using oil. And when that price went down, because we have never, ever shut down the world economy in the history of mankind like we did in 2020, we're going to have to start using it in greater quantities as we reopen. And that means the price of oil is going to go up. And I would say that DIG and GUSH are two places you might want to look. The dividend on DIG, I should say, is about 3%. The dividend on GUSH, less so. So I'm not buying them for dividends, but it would be noting that at least on DIG, you do get about 3% on your money. I'm buying those, and I do own DIG, but I think GUSH would also be a fairly good play. So if you want to take some money, you have the ETF, and I would say, it's worth a shot to diversify your portfolio, put some money in there, and let time go by. Let the vaccines get out there. Let us reopen the schools. Let us start driving again, going on vacation again, and all that we have done prior to COVID. And I think that what we will find is that we're going to have an uptick on the price of oil, and that these two ETFs should be growing and give a little bit of gas, you might say, to your portfolio. Okay, that's the end for tonight. Thank you. If you like this, give me a thumbs up. I know it may not be as exciting as some of the other stocks we've been talking about, humble and forward, that jump precipitously. But you want to have some foundation to your portfolio, and you don't want to have all your eggs in one basket. And this is a way to play, I think, the energy sector of our economy and the world economy in a pretty safe way. You may go down, but there's going to be a lot of push to push this up. And you can see, as I said before, that these ETFs have been going up of late. Even if you go back 6 months, what do we see? That they've been up since about November. And again, why is that? Well, primarily because that's when the vaccine came out and it's news of the reopening. We all see that. All right, folks, appreciate it. And if you want, make a comment. Tell me if you're interested in this. If there's some other stock you want me to take a review on, let me know that. In the meantime, have a good week and profitable investing. Take care.